Hey there, welcome back to our series on understanding your profit and loss income statement. This is part 5 of understanding your profit and loss, and we're going to talk about operational costs, also known as expenses. Let's do this. Hey, badass business owners. All right, let's continue this on and look at our operational expenses. The operational expenses on your profit and loss statement, basically the money that you spend to run the business. It is all those little expenses that add up and take away some of your money. Once again, let's go back to our profit and loss example that we've been using here for our landscaper, and let's take a closer look into this section. You'll notice it's the largest section typically on anybody's profit and loss. There's a lot of different items that we capture on here. You'll see that the most common one for people is advertising. You're going to spend some money on advertising. That's on almost everybody's profit and loss. You're also going to have the other parts of payroll. Earlier, we talked about the doers versus the support staff, but you also have the support people under here, but you also have the expenses for having payroll because you're probably going to have to pay taxes. You're going to have to pay other individuals to help you process your payroll. So that's going to be in here as well. We've got repairs and maintenance. There's all kinds of different stuff that is in here. Go over to the ice cream shop. They kind of have the same thing. You'll see there's advertising on there, but we've got equipment rental. We've got insurances. They've got training, uniforms, stuff like that. So it could be all kinds of stuff that add up to being on your expenses on your profit and loss statement. Now, let's take a closer look at one of them. Here happens to be auto. You're going to see that we are looking at it by the monthly sales. So they spent almost $2,000 on auto in this particular month, which was about 7.92% of their sales. So that meant for every dollar they took in, almost 8 cents went out just to be able to do the auto and truck expenses for that month. I happen to know that they happen to have some truck issues and they had to fix them. Now, there's two types of expenses that you have. There are ones that are called consistent. They're the same month to month to month, whether you have a great month in sales or a crappy month in sales. And those are constant expenses. And those typically tend to be more consistent. Insurance is a great example of that. It tends to stay the same because it's spread out over the time frame. Then you have ones that are variable. Payroll is a classic example of variable. It goes up and down based off of how busy you are. And when you have a lot of employees and you're working a lot of hours, that is going to go up. And when you cut back hours and it comes down, it's going to typically go down. So that would be an example of a variable expense. Rent, mortgage, whatever you have, that's another consistent. So different things go, your auto expenses are going to go up and down based off of what's going on. So you just need to know the difference between the two. At the end of the day, you're going to have money that is spent. In our top example, you'll see they have 21.89% is going out in expenses. When we get to the profit or loss side of it, you're going to see why that's important if you watched the other videos. And then the other side here in the ice cream one, you can see it's 27.45, but you can see how all these add up and they start to make a higher percentage. So when we're looking at these ones that are 0.62, 0.11, 1%, 1.2%, they add up. And this is why so many times when we look in our pocket, we can't figure out where our money went. It was all these little categories and things that we paid along the way. And that is where it surprises and catches people off guard because it does all add up. Like I said, so far we've looked at our income coming in. We looked at our cost of goods, what we're spending to produce the product or service. We looked at your potential profits under gross margin, if you recall in that video. Now we just took off all of the expenses. So of course, we're going to get to the bottom of that profit and loss statement. And this is why it's called profit or loss. So let's take a look at that video and we're going to dive in to understand that line and what might have happened. And by the way, if you want to learn more about your business numbers, don't forget you can go do the Know Your Business Numbers course, and it helps you understand your business numbers. Very inexpensive. It just is really for those that want to grab this knowledge and really run with it to put more profits to the bottom line. If you like what you see in this video, don't forget to click the thumbs up so that other people know they need to watch this video. And don't forget to hit subscribe, hit that bell so you get those reminders and you never miss any future videos. And if you are a podcast listener, you can listen to it here on the YouTube channel, or you can listen to it on your favorite podcast app. All right, badass business owner, we got one more video, so let's head on over to the profit video, and I'll see you there.